Good afternoon, everyone. I am Delegate Janelle Wilkins, and the date is Thursday, January 22nd. We will now begin our second briefing of the day. It is tax day here in the Ways and Means Committee for sure, and we're excited to be joined by the Comptroller of Maryland and her team to brief us on some key tax issues facing us here in the state. So I'd like to ask Comptroller Brooke Learman to please come up along with anyone else who she'd like to have speak and brief us. And I'll just start by saying the comptroller reached out very early on to continue the great partnership with this committee, and we'll of course work hand in hand given her role in the state and our issues of jurisdiction. And we've already hit the ground running, so just want to share my appreciation to the comptroller for her teamwork and collaboration. And likewise, the floor is yours.
Thank you so much, Madam Chair, Madam Vice Chair, members of the Ways and Means Committee. It is such an honor and a pleasure, really, to be working with all of you. Thank you for the partnership, and thank you for giving us the opportunity to come speak with you about the work that we're doing. And congrats to the new delegate. Great to see you. So up here with me and in the room with us today, you know me, Brooke Learman. We have our Chief Deputy Comptroller, Andy Schaffel, our Director of the Bureau of Revenue Estimates, Robert Rehrman, our Director of Government Affairs, Steve Harrington, and right behind me, she's got my back, is our Chief of Staff, Rihanna Matthews-Brown. So we'll walk through these slides. We have quite a few, so we're not going to spend too much time on any one of them. Madam Chair, I'll defer to you on questions. If you want to, I can break every section to give folks an opportunity to ask questions about that section, or we can wait till the end. It's up to you all. This is our org chart. It's so small you can't see it, but just know that we have divided our organization into very clear lines of authority so that we have accountability and we can move things through more quickly. We have our Chief Deputy Comptroller, oversees revenue operations and accounting. We have our Public Engagement and Communications Department. We have our Oversight and Law Department, and we have our Policy, Public Works and Investment Department, and then we now have a CIO, the first time the comptroller's ever had a CIO, to oversee all of our IT services and modernization. Our vision and mission is to work in partnership to create a state that's more equitable, more resilient, and more prosperous so that every Marylander can reach their full potential. And we have three core priorities guiding all of our work. Make government work better, ensure the resources of our agencies reach the people of Maryland, and make sure we are well positioned for long-term economic growth and success. So here's just a recap. This is not everything we do, but just as a recap of some of the role that we have is I divide it, think of it in three roles. Our CFO role, sort of elected CFO role, general accounting, unclaimed property. We run central payroll. We have the Bureau of Revenue Estimates. We also are the Annapolis Data Center Administrator, so we run the mainframe for state agencies. Then, of course, I'm an independently elected voice on numerous boards, and everybody's favorite role of mine, the Revenue Administrator. A little bit more about what we do. As a revenue administrator, we serve over 3.2 million individual taxpayers. They submit more than 5.8 million returns and payments each year. We issue 2.7 million refunds. Last year, we issued 444,000 earned income tax credits, totaling $519 million. And you know, the earned income tax credit and promoting it is a key focus of ours to make sure that people are claiming those really important credits to help them. We also serve 500,000 businesses paying various taxes and fees. Those business taxpayers annually submit more than 6.1 million returns and payments. So these are large numbers that we are dealing with. Unclaimed property, just wanted to make sure folks knew, we launched a brand new system in October. This is a great and streamlined system that makes it much easier to search for and to claim your unclaimed property, and easier on the back end for us to process it and get people's money to them. So check it out if you haven't. Sometimes at night when I'm bored, I just or need a break, I just look up people's names. I found my brother a bunch of money. We also have a policy research shop now. It's small but mighty, team of two. And they work with our BRE and others and others in the agency and elsewhere to publish economic reports. Thank you to all of you who've joined us from some of our webinars about those economic reports. We love to explain some of the research that we've done and hear your questions. We do these reports because we think it's important for everybody to have access to this data so that we can all do our jobs better. We also are excited about bringing more data online through dashboards and building transparency into our operations. We worked with you all in the Legislative Black Caucus on legislation to require the Board of Public Works dashboard, which we're proud to pull together and which is live now. So you can search BPW contracts. And we have the COM 360 dashboard live now where you can look up, that's the upper right-hand corner. You could go to your county and zero in and see how many folks are claiming the earned income tax credit or the child tax credit. You can see more of the data about your specific area and county. And then we recently launched just 2 weeks ago the federal spending dashboard that will help the CFOs of your counties and others to do analysis on and scenario plan if the federal government pulls back even more on certain agencies or makes cuts. They can go in here and see what those cuts would mean for your counties and your areas. Finally, just a couple of the boards that I sit on: State Retirement and Pension System Board, Maryland Community Investment Corporation, which is our first state-sponsored community development entity, trying to bring more resources and more federal new markets tax credits to Maryland, and the Food Center Authority, where we hired a new executive director. So we are very focused, as you know, on building better tools and bringing the system into the 21st century. We've launched a brand new website. We launched Maryland Tax Connect, a new stable and secure tax portal for our businesses in February of 2024. We've launched a new CRM platform so that we can track cases more easily. We launched our new central payroll system for the entire state and university next January. And we are launching Maryland Tax Connect for personal taxes this August. So a major transformation, one that will serve us well long after I am gone. And as you can see the bottom screen there, that is what our people look at right now when they're dealing with personal taxes, a COBOL screen where they're using function keys rather than a mouse pad. And then finally, legislation. You all helped us pass legislation several years ago to create the Office of Taxpayer Advocate. So I just wanted to let you know it's up and running. We have a great team of 4 people there. And when you contact us with constituent work, we often work with the Taxpayer Advocate to make sure those claims can be managed. So now I'm going to turn it over to Robert to talk us through the impacts of federal actions, OB3 or HR1, to talk a little bit more about what that required and what it means for us.
Great. Thank you, Madam Comptroller, and hello, Madam Chair and members of the Ways and Means Committee. It's great to be here again in front of you. Always enjoyed working with you throughout my career. I'll be talking about One Big Beautiful Bill and its impact on state revenues. And under Tax General 10108, the Comptroller's Office has 3 statutory responsibilities related to IRC amendments, including determining whether or not the state temporarily decouples from any amendment to the IRC. And based on the requirements of 10108, we determined that the state temporarily decouples for tax year 25 and any earlier tax year 3 primarily business income provisions. First, there were changes to R&E expenses. Second, there was a new bonus depreciation for manufacturing facilities under Section 168N of the IRC. And 3, there were certain changes to the interest expense limitation deduction under 163J. Now at the Bureau, our focus, we are laser focused on forecasting revenues and monitoring. It's not our job to comment on policy on whether it's appropriate to couple or decouple, but within the confines of 10108 and what that objective was, is to blunt the impact of IRC amendments on state revenues and on the state budget process. And related to that objective, it achieved it. Had 10108 not been in effect in September, we would have written revenues down by $200 million more in 26 hadn't the temporary decoupling provision not been in effect. Next slide, please. Oops. Thank you. And turning to the fiscal impact of the One Big Beautiful Bill after incorporating the temporary decoupling, is a complicated story, unfortunately, because it also links back to the Tax Cuts and Jobs Act. It's linked to that legislation. But turning to the corporate income tax, it's a little easier story, if you will. Most of the provisions that impact the corporate income tax are an acceleration of deductions that would have occurred over a longer period of time. So looking at that general fund fiscal impact, it's really focused in 27 and 28. That impact tails off, still negative, but less than 20 million in the out years. Now for the personal income tax, you'll notice in the out years that is a positive revenue gain. Now what that relates to is Tax Cuts and Jobs Act. Really a big impact of that was pushing people to take the standard deduction. And that also occurred on the state level. And both state and local governments benefited from that shift to the standard deduction. However, because TCJA terminated in our board forecast, we did not continue that revenue. But once the One Big Beautiful Bill passed, we estimated how much there would be in terms of continued shift to the standard deduction, and we estimated that revenue increase and incorporated it in the September board forecast. You will notice a modest reduction in fiscal 26. Part of that is the One Big Beautiful Bill altered the SALT deduction in tax year 25, generally increasing it from 10,000 to 40,000. Next slide, please. I'll focus on two of the personal income tax provisions of the bill. The first is this increase in the SALT deduction. That is, as I mentioned, 10,000 to 40,000 for most taxpayers. That increases by 1% through tax year 29, and then it reverts to 10,000 in tax year 30. It is subject to a phase down that starts for most taxpayers at 500,000. For the most part, that's a federal income tax story, if you will, for Maryland taxpayers. It's really going to reduce their federal income tax liabilities, but it's going to have a modest impact on state taxes because we require income taxes to be added back when itemizing. But one thing related to that is the IRS did not adjust withholding tables, and most analysts believe that there will be higher refunds in the next few months. So what we'll be monitoring is, will that have any impact on the economy, increased spending in the U.S. Or within Maryland? And then highlighting a second part of the personal income tax provisions. So these new benefits for overtime, tips, the senior tax deduction, specified maximums that also do phase out, those do not flow through to the state income tax because they're below the line adjustments. Similar to the QBI deduction, the 199A, it does not flow through to the personal income tax. So that the state income tax treatment will not change. We did estimate, had it been available to itemizers only on Schedule A, would have been about $100 million revenue loss. And again, that does not include anybody who would take advantage under a standard deduction. Next slide, please. And actually, could you skip one more, please? Notwithstanding my promise not to make commentary about tax policy, just want to highlight the R&E expenses. I think it was a little unfortunate, the changes that occurred on the federal level. This is not really a new benefit, but rather before TCJA, firms could generally expense costs in the year in which they were incurred. Now, TCJA changed that treatment and required firms to amortize those expenses over a longer period. Generally 5 years for domestic and 15 for international. And it was always thought that that wouldn't go into effect, that Congress would act to fix that. They did not, however. So those changes did go into effect, both on the federal level and on the state level. So that tax treatment changed on both the federal and state, and we did have a revenue increase due to those changes. OB3 generally kind of restores that, and retroactively for certain firms, generally under $31 million in gross receipts. But again, it's not really a new benefit like the 168N, but rather a restoration of benefit that had generally always been available to corporations. And looking at who that would impact, a preliminary analysis of our data will be focused in our aerospace and defense industry, life sciences, and technology companies. And together, those are about 1/5 of our largest taxpayers. Now, since the One Big Beautiful Bill, what's been happening with our corporate income tax revenues, and that's probably one of the biggest mysteries, if you will, right now, are uncertainties. And I would say both at the time of passage and as states have seen revenues, it's the number one topic of conversation when we speak to our colleagues in other states. And as what this chart shows is from our top 500 taxpayers, we've seen broad-based weakness throughout almost all of our sectors, and in total through the first quarter, we were down about 10%. So I think there's three possibilities that are occurring in our corporate income tax. First is there's a lot of uncertainty about the act, both on the federal level and in the state. So corporations may not be accurately adjusting their estimated payments, if you will, because of that uncertainty. And indeed, what we saw when the TCJA passed, at the end of that year, we had a surge of final payments when kind of there was a better understanding. But I do think from a revenue standpoint and a budget standpoint, it's a little hard to count on that occurring again. The second possibility is there's just other provisions in OB3 that are negatively impacting the state income tax, the state corporate income tax, I should say. And I think I would highlight probably the most uncertainty is the changes to the international tax provisions that were enacted. Maryland and other states likely benefited from the regime that was established by TCJA, but OB3 kind of undid, if you will, some of those provisions. So we might see some negative impact on our revenues. And then the third possibility is for this disconnect between corporate profits and what we're seeing is there something going on in Maryland that's driving this weakness? And we do have some evidence of that. We looked at our largest federal contractors. Our defense contractors are holding up in terms of estimated payments, but our non-defense contractors are showing significant weakness. So unfortunately, this is a complicated story, and this is going to take some time to determine what exactly is driving the decline. But also emphasize this is occurring in other states as well. And then lastly, I've just included estimates if the General Assembly were to permanently decouple from the provisions. I understand the governor's budget includes permanently decoupling from the 168N deduction, but I also included the R&E and interest expense deduction as well. So, thank you.
Okay, and then we have some supplemental tables for you that we won't go through, but we'll make sure that you have just for your own to have, because I know you really excited to dig in on all these numbers. But next we wanted to talk with you a little bit about our revenues and revenue administration. And for that, I will turn it over to Andy Schaffel.
Thank you, Comptroller. Thank you, Ways and Means Committee. The first slide there by the numbers shows what we collected in fiscal year 25. The bottom line there is $36.2 billion. So that is what our office brought in, net of all refunds. The Comptroller at the beginning mentioned about 6 million returns and payments from businesses and about 6 million returns and payments from individuals. That's how that shows up in terms of dollars and cents. So quite a bit of money. The right side shows all of the work we do after we get the money. We act as a central authority for a lot of revenue distributions, whether it's going to the counties. For example, we distributed $8.5 billion to the 23 counties and Baltimore City in that fiscal year. $204 million to municipal governments. We have admissions and amusement taxes that we distribute to the places where those activities took place. And then we have a number of other funds that we shift money to, whether it's the Bay Restoration, to do bond service for wastewater upgrades, a number of key priorities across the state. We're just directly involved as sort of the gears that keep all of that moving. But the point I like to get across here is that anytime we're doing anything with money or taxes, there's a lot that goes on after that as well. We have to make sure we get it, that we're accurately accounting for it. We know where it needs to go at that point in time. And that's a considerable amount of backroom effort in our shop.
Part of why I like to say the Office of the Comptroller is the backbone of state government. You never see us, but we are holding it all up.
That's right. The next slide is a slide that shows a little bit about our personal income tax base. The personal income tax in the state of Maryland is about 50% of the general fund's revenues. It is the most significant revenue source. Within the personal income tax, wages are the most significant source, but then you have business income and capital gains that are far more volatile and tend to concentrate at the higher end of the income stream. This chart tells so many different stories, and I think it's really important for you policymakers to have this. We hear a lot about the 1%. This chart does approach that, and it goes to an even finer level of detail. So I'm going to walk you through one line, and then I'll just kind of call out a few data points in here. The very top line there is our top 0.01%. The top 286 households is that next column. They had an average income of just under $24 million, which is 2.2% of all of the income earned in the state of Maryland. They paid $350 million in total, or an average of $1.2 million, and that's just the state share. They pay county taxes as well that are probably about half of that, so about $600,000 probably on average in county taxes. So they accounted for 3.1% of the Maryland tax paid. So the fact that they were 2.2% of income and 3.1% of tax paid tells you that our progressive tax brackets are doing as they're supposed to do, right? They pay a slightly larger share than what their income shows. On the right side, where you see another boxing, it gets cumulative. So again, for that group, you see the same numbers, 2.2 and 3.1. If I take you down to the third row, you'll see the 1%, and you can see the distinct bucket there. But then if you move over to that far right where it's cumulative, you'll see that the top 1% as a cumulative group, the whole 1%, is just under 15% of income and 20% of the income tax paid. So what we have is a very concentrated tax base, which makes Robert's job a whole lot more difficult in terms of estimating. And that's part of what this next slide shows. The green bar is the share of total state tax from the 1%, going back all the way to 2003. And the blue line is the growth in the tax they paid. And what you see is they're pretty consistently around that 20% mark, as they were in 2024. You can also see that when it starts to jump above that mark, we usually start to see a downturn at some point, right? That's the economy bubbling, that's capital gains, taking a very significant share of the income recognition. And you see these incredible growth rates. You can see that we've added numbers there around COVID. COVID is, of course, a fascinating period for economics, all sorts of reasons. But in 2020, as we shut down the economy, we saw income growth of 18%, and then in the next year, 33%. And then we see the decline, down 22%, down 5%. So what you see is that this group, and I'll call out 2022 specifically, 2022 was actually a good year for wage earners. Wage earners saw significant growth in 2022. And I mentioned that that is our single largest source of income, but the fact that the 1% were down 22% actually made our income tax growth flat to slightly negative. So just the outsized role that a small number of taxpayers can play in our economy and in our revenues, I think is very important for all of us to account for.
Okay. Robert, do you want to talk a little about estimates?
So in terms of our estimates, the good news is that our revenues continue to perform in line with our expectations. And starting with the December 2024 board forecast, we made a series of proactive adjustments to the forecast in anticipation of the federal employment losses in the state and in the region. So in total, December, we made a modest adjustment of less than $100 million upwards in 26 and 27. Part of this was a recalibration of expectations of where we think we're going to get our revenues between our big three revenue sources, and then also writing up some revenue sources less connected to the economy. We're continuing to get more interest, or continuing to have interest income hold up, and then also the estate tax has been stronger than expected. Consistent with our forecasts, we expect the economy to slow. So in 2026, we do expect the economy to slow, and it's going to be our expectation that that is going to be the case until the federal employment spending and reductions kind of stabilize in Maryland and in the region. Next slide, please. And just want to highlight that this year is going to be challenging because there are multiple uncertainties in the forecast. Not only is there the one big beautiful bill, but there are the tax law changes enacted by the birth of 2025. So what that results is each of our big three revenue sources is being impacted by tax law changes above and beyond what is going on in the broader economy. So I think that has two effects, if you will. We have estimates on top of estimates. And I think the accuracy threshold for legislation is a little higher. Whereas our goal is to be within about 2%. I think if you're within 10% in legislation, it's a pretty good estimate. So if I were to be offered a bargain at this point in time to lock in only $150 million error in our forecast from all of those tax law changes, I would probably take it as acceptable. The second consequence of that is because the one big beautiful bill and BRFA on the personal income tax side were retroactive to 2025, that pushes revenue to the latter half of the fiscal year. So we don't see as much throughout the year. So revenue monitoring becomes a little more difficult. So we've kind of increased our final payments estimate related to those tax law changes. And also, and as an example of how it kind of makes our interpreting our data a little bit more challenging, estimated payments for the personal income tax were really strong at the end of this year. And usually we'd feel really good about that, maybe even raise our capital gains forecast. But because of the tax law changes, and particularly the increase in the SALT deduction to $40,000, there's a lot of incentive to get those estimated payments in before the end of the year. So again, we have to have a little bit more work to kind of determine those different impacts.
We do have quite a few slides now on sort of job losses because of the federal government and what they mean. We probably don't have time to go through all of them, but we just wanted to make sure that you have this information as backup so you can take a look at it when you'd like. We did want to spend a minute talking about Maryland Tax Connect because this is going to affect all of your constituents. This is our new tax system, and we are bringing it online for personal taxes in August. So August is the only time really during the year that we can implement a new personal tax system. As you know, big tax season, January to April. We're continuing to process into May and June. We have to have everything squared away by July so that we can then move everything in August, and then we have to gear up again for the October filing season. So August is the sweet spot. So it's essential that we move our tax system, our personal income tax system, to this new system this year. Our legacy system, as a reminder, a week I will never forget, about a month or maybe less than that after I was sworn in as comptroller, our entire tax system went down for about 7 days. We could not process any taxes. We were looking at what our coup plan was. It was a scary week. And so it just was one demonstration of how fragile our legacy system is and the importance of moving into this new system this year. It will give agency staff a single view of all of our constituents rather than having to look back and forth at different systems. It will provide transparency for our taxpayers, for our residents, so that they can see their tax account and have greater self-service options so they don't have to call us as much. And August will be a great time because it's sort of a mini filing season that we have the time to test it and work with our CPA and tax preparer community. We also wanted to update you on compliance. The Comptroller of Maryland's Compliance Division is charged with enforcing all tax laws that we administer. And increasing our compliance footprint has the direct benefit of producing more revenue collections for all of you for our budget and to support Maryland and to making Maryland a more fair state, right? There shouldn't be an edge to a business or an individual just by being a tax scofflaw. To increase Maryland's compliance footprint, the General Assembly allocated an additional 28 PINs 2 years ago, or a year and a half ago, and additional money for IT investments and special projects as part of its FY25 budget. In November 2024, we estimated the net additional revenue gain from these investments in both staffing and technology would be to be $5.1 million in FY25, $19 million in FY26 and $37 million in FY27, and we are right on target. That is what we have realized so far, and we are grateful for the support. We, just as an example of our compliance footprint versus some of our peer states, we had, before these PINs, we had one auditor or collection agent for every, I think, 25,000 Marylanders. Most other states our size had one collection agent or auditor for every 12,000 residents. So we have a significantly smaller auditing team and collections team than most other states our size. And that impacts our revenues profoundly. We have 3 IT projects that we're excited about in our compliance team that we are hopeful to, that are either are underway or we hope will be underway soon. Andy, do you want to talk a little bit about our digital discovery and remote sellers and barcoding?
As the comptroller mentioned, these are modernization initiatives as well as growing our portfolio. The digital discovery is helping us to find folks that do much more business online, whether it is an NFT, a Bitcoin capital gain, all these types of things, all these places that money is moving in today's economy that really is hard to report. The legacy ways that banks report income is not available in those industries. So this allows us to identify those folks, and then we marry that up with our data, and we can make pretty accurate determinations as to whether or not they've included that income in their tax statements. So this will do 2 things. 1, it will generate revenue, and 2, it will do the most important thing, which is encouraging voluntary compliance, right? Most people do what they're supposed to do. This will really help make sure that they are doing that. That's the most important component. Remote sellers is very nice. Many, many years ago, the Supreme Court decision, the Wayfair decision, opened up the door for retailers that don't have nexus in the state to pay taxes if they're selling into the state over certain thresholds, which is most of them. Surprise, surprise, many were not necessarily following those statutes. So we have a project that's looking to go out and make sure that we're capturing that type of revenue, and we're finding some significant benefits in those areas. Intelligent mail barcoding, it's very important that we send mail, right? We're one of those people that still needs to send paper mail via the USPS. People are not very good at updating their addresses anymore. Amazon has better addresses than we'll ever have via the USPS. This will help us have those better addresses so we get our letters to the people that owe money quicker. They'll owe less interest. We'll collect more money. It's a very small investment. We see it generating upwards of possibly $3 million a year. And this seems pretty basic to us. So we are seeking your support for that program.
And then finally, we wanted to chat with you about, actually 2 more things. One is we wanted to chat with you about our Taxpayer Services Division. This is a division of our agency that answers the calls and staffs our 11 offices around the state. We want to give you a little bit of a window into into the call volume that we are experiencing. As you can see, there's total calls versus calls answered for 22, 23, 24, and 25. Now, I do want to caution, and there's a tiny little note there that you can't read, we will stand by sort of the only truly accurate data is the 2025 data, because we switched into a new system in calendar year 25, and so our call data collection has significantly improved. Previous years underreported total call volume because they excluded any calls where the queue was full, so you called in and it said there's no space and it hangs up on you, which we should be counting those calls because those are still people who are trying to get through, but our previous system couldn't count them. So as a result, some of the year-over-year comparisons are a bit misleading. But I think you see the picture that there are many more people trying to reach us than we have the capacity to answer. As I noted, we have brought in the first ever CRM, Customer Relation Management System, MyCom Connect. Our goal is to have first call resolution for all of the calls that come in, and we can now track that and track every call that comes in and track every interaction that we have for the first time. And that is what we were doing, and you can see in this slide cases that have come in. We've created, by the end of October, from January to October, we created 211,000 cases in MyCom Connect, and that system is now fully implemented and working well. The final slide on our taxpayer services I wanted to share is our branch office visits. So here you see our virtual, which is the green bar, in-person appointments, And then the purple bar are walk-ins. So the purple bar is high, and that's because people can't get through on the phone. And so they walk into their Greenbelt office or their Cumberland office or their Wheaton office and try to get help. And we obviously are trying to meet the needs that everybody has with a staff that is simply not big enough to meet the needs. And that is why last year in our budget request, we requested 129 new PINs, which is what we believe we would need to answer 80% of the phone calls that come in within 5 minutes. We received 25 new PINs last year, recognizing that it can be hard to onboard and recruit 120 people at a time. We requested another 25 PINs this year, as well as several tax attorneys to help us dig out of some of the backlog that we inherited for our hearings and appeals cases. We did not receive any new PINs in this year's budget, so we will be working, we hope, with the Maryland General Assembly, with all of you, to try to secure additional PINs so that we can make sure we can answer the phones and staff our call centers. And our budget offices. So 2026, just as a reminder, we are doing big things. We are moving Maryland Tax Connect for personal income taxes, for PTEs, for fiduciaries. We're going to move over 100,000 workers to Workday on January 1st. We're continuing to build towards a new fiscal management system for the entire state of Maryland. We're opening new branch offices in Bel Air, Rockville, and Frederick. We're continuing our Earned It campaign on the EITC and excited to continue bringing you economic policy research reports. And we look forward to working with you every step of the way. Thanks so much for having us today, and I look forward to your questions.
Thank you so much, Madam Comptroller and team, for the thorough briefing. We appreciate how on top of so many different issues you are and all of the innovative ways that you're engaging our taxpayers and providing transparency and information. We are going to take questions, but I actually do want to ask if you could go back to the withholding and federal layoffs.
Sure.
And provide us with information about the impacts of the federal government layoffs
Yes,
on
we
our
certainly
revenues.
can. Do you want to show the slides again?
Yes, let's go back to it.
And we can go back to that.
It sounds like you have to pull it up at the table, but we have someone coming to help.
There we go. Okay. Yay, Zoom. Okay. Let's see. I've got to figure out how to go backwards. Okay. There we go. Is that right?
Go back.
That one?
Yes.
Okay, great. Take it away.
Thank you. For the federal job losses, what we have on this chart is the direct employment losses in Maryland, the region, and the U.S., and then also on the right by month in Maryland and in the region. So in total, there's been a 15% decline in employment in Maryland, and I think of it as two stages. One, before the deferred resignation program, and we were bearing a particularly high cost of the employment reductions. About 1 in 6 of every federal job loss was a job that was located in Maryland. I think primarily because a lot of those cuts were focused on non-defense federal agencies. Looking at Treasury nationally, there's about a 29% decline. HHS is about 22%. If you look at the large reduction in October, that primarily reflects the impact of the deferred resignation program. The individuals who are essentially on leave, not working, but getting paid generally up to October. The good news, if you will, is our loss ratio didn't hold. We had a lower share of the total employment losses, but it was kind of a second best story because Virginia and Maryland kind of caught up to us, if you will. So looking at the jobs in Maryland, a better story, but the region, it was a little bit worse. I believe looking at the data, it's mainly because there was a shift. Up until the deferred resignation program, there wasn't a lot of job losses at the Department of Defense, so maybe 8% of the total, but there was a high share in the deferred resignation program. It was about half in the Department of Defense. So I think that explains the shift. And in terms of what we're seeing in our withholding, if you could advance one more, or two more, I'm sorry, one more there. There is a disconnect, if you will, between our tax data and the economic data. And this is kind of two sources when you compare kind of the general negative commentary about the economy and our withholding income tax revenues. What the blue bars show is if you take out federal contractors and direct federal employment, what has been our growth rate in withholding? And even though our labor market growth has stalled, the individuals who are employed in the private sector are having good, healthy average wages. So that's helping sustain our withholding income tax growth throughout the year. The second part of this story and the disconnect that's not shown on here is money that we've received from withholdings from federal government employees. So in calendar 25, notwithstanding this 15% reduction, we've actually had more withholdings related to federal employees. And I think part of that is this disconnect with the deferred resignation program. Part of it is also just noise. There's always money moving around. And when we looked at the quarter one of calendar year 25, we actually had really strong growth in our withholdings. And so the downside of that story, though, is now that we're in 26, those employees are no longer being paid that were on deferred resignation. We're going to be going up against tough comparables. So even if our private sector holds up, in Q1, we're going to be really looking at kind of the difference in federal withholding collections. And we will keep all policymakers informed of that.
Thank you so much. I appreciate that. Delegate Buckle had the first question.
Thank you, Madam Chair, and good afternoon, Madam Comptroller. I just had a couple questions, and I don't know if it'd be better directed to Mr. Brehrman, Mr. Softly, whoever feels like chiming in, but I was going to direct you to some of the slides as well, just so I better understand them. The concentrated income tax-based slide that you showed us with the graph of all the numbers, am I reading that correctly? Is it correct that the top 10% of all filers by income, that they would pay 54% of all Maryland tax? Is that correct?
Of all Maryland income tax, that is correct.
Okay, and so that then, if you flip that around, the top 25%, and I thought in the beginning I was reading it wrong, but the next column below is if you're 10% to 25%, so that includes everybody in the top 25% of earners pay just under 80%, 70, 79%, just under 80. If I'm doing my math, and I'm sure that Madam Comptroller went to law school because she was great at math, but I went to law school because I'm not very good at math, so I don't want to screw this up. That would suggest to me then that the bottom 75% of household earners or household income earners are paying about 20% of the taxes in Maryland. Is that a fair
Just
expression?
income taxes.
Just income taxes, personal income taxes. Yeah, thank you. And then the other thing was with the slides discussing the federal tax legislation impacts in terms of coupling versus decoupling. The slide that talked about the general fund impacts and the fact that we're actually at the personal income tax level netting a tax windfall from the decoupling from the standard deduction. Do I have the correct understanding of that? Because the feds increased their standard deduction so much, we didn't really proportionally keep pace. Ours always was less than theirs, but there was a proportional ratio. We didn't keep pace, and as a result of that, you know, I found in my experiences, people that have recounted to me, they have a smaller federal tax bill, maybe by a few $1,000s, but they have a larger Maryland tax bill because perhaps they used to itemize and now they can't, and their standard deduction is smaller proportionally. So they really have sort of a net. The government, to me, the government is the government is the government. And if you feel like, well, gee, I saved $2,000 at the federal level, not my check to the IRS, but I sent a check to the Honorable Brooke Learman for $2,000 more, it all sort of worked out the same. Is that what the effect of that shows, that because of the inability to keep up proportionally with the standard deduction, we're actually bringing in more money than we otherwise would?
I think that's a fair assessment.
Okay, and then my last and final question about the individual tax provisions on the next page. We are decoupled from what I don't like calling it one big beautiful bill. It sounds kind of silly, but the federal bill we're not coupled for the tips and the overtime, so we're still going to tax people. Someone's going to file at the federal level and say, hey, I don't have to pay taxes on X type of income. They still will have to here in Maryland, correct?
Correct. So they'll be able to take advantage of exempting that up to those specified maximums on the federal level, but the tax treatment will not change.
In Maryland, we're just treating it as ordinary earned income, so their AGI won't flow through from their federal file to that. Is there an estimation of what kind of a positive, I would think that would only have to have a positive impact for our bottom line, what kind of a positive impact will that produce?
So it prevents a revenue loss because the tax treatment doesn't change. What we estimated for, if it just flowed through on the itemizers, it would have caused about $100 million revenue loss.
Okay. And what's the car loan interest and senior deduction? So there's something in the federal bill that says I can now deduct a certain proportion of car loan interest. We're not going to flow that through either unless we would enact legislation to allow you to deduct that. And that's a deduction irrespective of whether you take the standard or itemized, right?
Correct.
Okay. So we're not going to do that. And what's the senior deduction? I mean, I think maybe we should do that one. The tips on taxes, I think, frankly, that's dumb. The car loan interest one, I think that makes some sense. We can talk about that. What's the senior deduction?
So the senior, it's an additional deduction that is now available on the federal level. I believe it's up to $6,000, but it is subject to an income phase out.
And that's only for individuals who are senior citizens. They can shield a certain percentage of their income from any source?
Correct.
Okay. Thank you. I appreciate that.
Delegate Hornberger.
I want to talk to the income tax and the standard deduction versus itemized with these new caps. I would make the argument that if you're a high earner or high net worth, that you're going to model both of these scenarios and you're going to choose the one that's best financially for yourself as a filer. How are you scoring a A/B choice on a filer?
Sure. I think. So building on the work that was originally done for TCGA, what we originally assumed is taxpayers would optimize both federal and state taxes. Right. But what we've seen in the years since is generally taxpayers, there's a certain portion that are only optimizing their federal taxes with the tax software. It kind of just says, hey, you're going to take the standard deduction, and then it automatically flows through for the state. It's a little more involved than that because we also had to estimate kind of interaction with other new legislation, including the phase out of itemized deductions on the state level for certain higher income taxpayers. Yep. So we did incorporate both some optimization assumptions and these different pieces of legislation.
Okay. And then the second question deals with, I think it's the 174. This is where you've decided to decouple on the 3 different provisions. This one specifically is the domestic research and experimental expenditures. My question is, why not look at partial conformity? Because we do have biotech sector, we have all of these companies that are indigenous here. I would make the assumption that there's going to be states that are fully conforming.
Mm-hmm.
Sure.
Yeah.
So
They might want to migrate to those states. So is there a middle ground where we are still making some static revenue? They're not changing, but at the same time, we're not losing these large companies to maybe our neighboring states. And I know Virginia's also fully decoupling as well. But I'm talking like North Carolina, which hasn't decided yet, and some of these other places where this is a big industry.
Yeah, I just wanted to clarify, we didn't really decide. It's what the law says for us to do.
Well, yeah, the 5 million trip got hit and.
That's right.
Yeah.
Yeah,
And
sure.
it's just for the 1 year. So that means that for 2026, we are coupled to that. So
Okay.
current law, we are coupled to the R&E. And then.
We do what you tell us.
We do what you tell us. right?
Sure.
Policy choice.
In the budget, yeah, I mean, they're going to fully decouple. All right, thank you.
Did you make the budget?
Yeah, exactly.
You didn't get your pin.
I can go call Secretary Weissman if you know.
Thank you, Delegate Hornberger. We'll move next to Delegate Patterson.
Thank you very much, Madam Chair. Good afternoon, Comptroller Learman and team. I don't have really questions, just statements, and certainly to have a personal testament to your unclaimed property, that it works. I would encourage everyone to really pursue it. And the fact that your office, your team has been very efficient in terms of responding to the needs of the citizens of Charles County, particularly this person sitting here. I'd also like to recognize and encourage you to continue to reach out to the residents and citizens of Southern Maryland, the rural people, because your team was responsible for a very, very effective information session for small business, minority members, and veterans. And that is something that we need. Your presence in October was effective, and we're encouraging you. I didn't see it here. I'm sure it's involved in some of your information or plans for 2026, but it's critically needed that the residents heretofore who've been really unfamiliar with the tax credits and opportunities, that they continue to be served.
Yep.
And I encourage you and appreciate your involvement with Southern Maryland.
Well, thank you. I appreciate that, Delegate. And, likewise, if anybody, we are delighted to now have a small business director in our agency. We have public engagement officers. So if any of you, there's small businesses who need help, you want us to come to table to bring resources, we are here to help. We want to provide information to our businesses. We want them to succeed. I remind our business leaders, when they do better, we do better. So, we're all in for helping in any way we can.
I'm going to jump to my vice chair, and then we'll go to Delegate Hartman.
Thank you, Madam Chair. Thank you, Madam Comptroller and team. Appreciate the presentation and all you do. My question is actually about the compliance division, and particularly, recognizing that nationally we see low-income filers really overrepresented in auditing, and as artificial intelligence plays a larger role and algorithms start compounding and exacerbating biases, that's become even more clear. And what are we doing at the state level in the compliance division to be proactive in guarding against that and making sure we're really focusing fairly in our audit process and recognizing sort of maximum return on investment as well?
Sure, it's a great question and certainly a concern. So I'll give you a couple ideas. So one is these new programs that we have that we want to bring in are really targeted towards identifying non-payments, right? So it's you own 10 Airbnbs in Ocean City, you are not paying, you are not reporting all that income from your Airbnbs to us. It's hard for us to see that without this kind of discovery work. These are mostly higher income. If you're in Bitcoin, you own these properties, this is a higher income level type of person. And so it's part of the reason we are moving into these new types of compliance programs and projects, because we think that is more, it's a better use of our limited staff, and to make sure that we can bring those folks into compliance is a better ROI as well. And when we are doing much of our compliance activities as well are simply sort of sending out letters. The federal government sends us, the IRS sends us who's paid what and what they've said. And when it deviates from what we have, we're just sending out a letter saying, hey, we think you owe this. And there's always, there's always false positives, and people come to us and say, no, look, and we're like, okay, fine. But it's important that we notify people, because we wouldn't want to not notify them, and 3 years from now, they have all this interest accrued. So better to have a few false positives than to not tell anybody what's going on and drag it out. I don't know, do you have other thoughts on compliance and how we guard against?
Yeah, I would add, to your point, a lot of states buy these types of models. We do, in partnership, a lot of the modeling around this. There are no so-called black boxes at the Comptroller's office. We are aware of how our models operate, and we do analysis of the outputs of those. They do help us to more accurately target, but they also help us to accurately distribute how we're going about those. And I will add, as the Comptroller noted, because of our lesser staffing levels relative to other states, I think as we continue to bolster the staff there, we would like to put more of them towards those more complex audits. It's longer to revenue, right? And that tends to be that higher income because things aren't as clear. But that is a place that we are continuing to build our capabilities, and with additional resources would continue to push that further.
Especially important because since the IRS has laid off so many individuals and so many auditors, they are the ones who are doing those really complex audits, and then they would find the big dollars, and then they would adjust the AGI, and that would flow through to us, and then we piggyback onto it. Well, the IRS isn't going to do those audits anymore, so we're going to miss out on quite a bit of money from some of those more complex situations.
Thank you, Madam Vice Chair. Delegate Hartman.
Thank you, Madam Chair, and thank you, Madam Comptroller and staff. Appreciate you being here today. So last year, we passed legislation that requires tax on gold and silver bullion. When that tax is paid, is like in tourism, there are different tax codes, so we know how much is coming in for full-service hotels and different things. Do we know how much exactly is coming in for bullion sales in the state? Is it a separate tax code?
I don't know off the top of my head. I would need to go back and look and see if that's divvied out. If there's some way to pull that out of the other taxes that we have. I do not know off the top of my head, but we can find that out for you.
And the other thing is, you can invest in gold and silver in different ways. By buying a physical bar of gold or silver, you can have a certificate and it's held elsewhere. Are both forms of investment taxed, or is it only in the physical capacity?
I have to ask. I don't know.
I'm not really sure.
I don't know. These are good questions that I do not, these are issues of first impression for me. I've not had anybody ask this yet, but we will go learn all there is to know about gold and silver bullion and taxes. The one thing I remember from that is that there's an exemption for a big show, right? That happens every year.
I think that's for coin.
Oh, that's for the coin.
Not necessarily bullion.
The bullion, okay.
So with bullion, it really doesn't have, it's not like you're buying a utility.
Right,
like a coffee pot that has utility purpose.
Yes.
It's strictly an investment.
Okay.
I gave the analogy on the floor. It's like penalizing somebody 6% to invest in their 401k.
I see.
My concern, gold and silver is exploding. Gold is
Yes, it
almost
is.
$5,000 an ounce right now, up over 50% this year. Silver's over 97, almost $100 an ounce, up over 150% this year. That tax could have been discouraging a lot of people from investing in Maryland, losing out on income tax from, the growth. So if you were discouraged from buying it, you're not going to have it to sell. Hence, Maryland is losing out on potential income tax. So if there's a bill that would exempt the sales tax on bullion, it wouldn't reflect numbers like that. It's only how much is lost because of the sale. So, just if you had those numbers.
Yeah, we can pull the numbers for you, and we'll see what we can find. Absolutely.
It would be great to see.
Sure.
And speaking of those tourism numbers, I think we have communication once again
Yep.
where the Maryland Tourism Development Board is
They're waiting
looking
for
for numbers.
their
I
numbers.
appreciate the
Sure.
help in the past, and
Yep, we can get
looking
them.
forward to hearing so that we can have that information to make valuable decisions in the Maryland Tourism Development Board. So thank you.
Absolutely. Thank you.
We're getting there. We're close.
Thank you, Delegate Hartman. We will go to Delegate Miller next.
Thank you, Madam Chair, and thank you, Madam Comptroller, for being here. I did reach out to our Chamber of Commerce in Frederick County, and I do want to convey on their behalf their appreciation for the improvements that have been made as far as the business outreach and everything that your office has been doing to support them. It's very much appreciated and noted and respected, so thank you very much for that. Thank you. And I personally wanted to thank you for, as far as the business-to-business tax and the tech tax and all the complications and issues that has, the uncertainty that was surrounded all of that when it was, especially when it was first passed, and I'm sure even still now, that there was a lot of concern from my constituents, and your office was very responsive to them and meeting with them, and so definitely appreciated that. Is there an update on how that's going, how many people you've had reach out, supporting our small businesses? Because there is a lot of issues with we're, being fourth in the nation or more as far as losing business and net outflow. So how are we supporting businesses in getting through some of those technical and software issues that we talked about?
Sure, great question. And, we're always, like I said, looking to support our businesses in terms of the new tax. We stood up very quickly a web page to make sure we had all the sources consolidated on one place. So tax practitioners and CFOs at businesses could go to one place to figure out, try to find the answers. We did a number of webinars with businesses and business groups to make sure that they understood what was covered and what wasn't. And we're always happy to continue those. We do, I think I still have some Maryland Association of CPA people here. We do a twice a year webinar where we go through and talk about what we're working on to give updates. We do Q&As, but then we also go to the Advanced Tax Institute to work with them and provide updates. So we try to maintain an open flow of communication, and any businesses or business groups that would ever like a webinar on a specific tax, on an issue or a roundtable, we will make that happen. Our goal is to educate our taxpayers so that they can do what's right. We know that 99.999% of all taxpayers in Maryland are trying to get it right. And so we want to make sure that we are there to educate them and help them do just that.
Thank you. And then the other thing that I appreciated is actually a lot of your state spending summaries and your briefings and your updates, and a couple that really hit home, or the one biggest one, and you may want to maybe comment on it for people that missed it, was the school construction. And the state of our school construction right now. That's been a big issue with me that I've tried to help solve, tried to have solutions for. So could you speak a little bit about that, about the state of our schools right now? Because the report was a little frightening.
Sure. So I don't have it in front of me, but I appreciate that. I think, obviously you're an important committee in dealing with and working on our education, and I think school construction is something that all of us want to see, more funding for, despite, but there are always constraints. And so the point of those reports is to just sort of shed a light and make sure, we have the data at our fingertips to understand what the challenges are, and then what some different jurisdictions around the state or country are doing. I think we highlighted Frederick as a county that is trying to tackle this in a new way. Prince George's County with their new way that they're building schools. So trying to both name the challenge, which can sometimes get hidden in all the numbers and the different bodies like the IAC and others that are there, but also to present some ideas as well. So, but thank you. Glad they're useful. That's the goal. We want our reports to be useful. We want them to be read.
That one was very, very useful. And then the last thing is, as the state has become, in my opinion, what the feedback is, less business friendly. Like I said, the small businesses where, their ability to survive, particularly with things like the tech tax going on. Are you planning on looking at anything, a report or task force or group of how we can keep attracting and supporting our small businesses here, how we want people to be able, obviously, to come to Maryland. So how do we stop those slides, start going the other way? I mean, obviously, I don't need you to give me an answer right now, but is that something that your office, can we count on you for looking and continuing to model some initiatives that might be helpful?
Sure. We work very closely with Secretary Coker and his phenomenal team at the Department of Commerce, who are very, who are constantly reaching out to businesses to try to understand how to help them grow. Constantly, they have a whole wing on business attraction in Maryland to try to bring new businesses into Maryland. And we try to be there to make sure the administrative side of the business, right, the CFO of the business understands that we're here to help, and that we want to make sure that we can meet their needs, and that we can help them operate in Maryland as efficiently as possible. And, we'll continue to do that for sure. Thank you.
Thank you, Delegate. We'll go to Delegate Polakovich-Carr and then Delegate Young.
Thank you, Madam Chair. Thank you, Madam Comptroller and your team for being here and all the great work you do on behalf of all the taxpayers in Maryland. I wanted to ask about the impacts of the end of the federal direct file program. We know a lot of Marylanders were using that to prepare their taxes for free. So I'm curious what operational impacts it has for your department, but then also what you think it's going to mean for our residents who are filing taxes.
Yes, thank you for asking that. The direct file program, I would say, was a phenomenal success, and it's unfortunate that it was ended. We partnered with Code for America and the IRS, of course, to make sure that we could participate in the direct file system. We had thousands of people participate in it, and we had a survey at the end of direct file. So once you used direct file and you used our system, you could say, what did you think of this system? And I am not kidding. One of the comments that we got, because one of the questions was, what would you improve? One of the comments that we got was, you cannot improve upon perfection. That is how much people liked direct file. And so we were extremely disappointed to see it end, because it really is, it's important that we provide a free way for people to do something that we mandate them do, which is to file their tax returns. So we are focused on improving the ability in the state to file your state taxes for free, right? We have an old system called iFile that many people use, but we know that it needs an update. And so as part of the work that we're doing to modernize our revenue processing system through Maryland Tax Connect, we will be building an updated free filing system as well in Maryland. Now, of course, it's not going to be as good as direct file, because direct file was both federal and state, right? This will just be state, but we do plan, we hope before next January's tax season starts, to roll out our new and hopefully improved free filing system for Maryland taxes. So, thanks.
Thank you. Delegate Young.
Thank you, Madam Chair, and thank you, Madam Comptroller and your team for another wonderful presentation, very informative. I'm going to start kind of where we started earlier with my colleague across the room's question about the share of taxes paid. I just want to make sure that we have on the record kind of the adverse. Where we talked about the top 25%, the share of taxes paid is 79%. Isn't it true based on, and I got a math degree, so I think I'm really good at math. Is it? I had to come. So I just want to make sure, because my district is a district that the median income is $55,000. It's the second lowest in the state. Myself and Delegate Addison across the room. But on the adverse, it looks like the bottom 75% of Marylanders are only accruing, looks like 35% of the actual income in Maryland. Is that correct?
Your math is good.
And if I go a little bit further down, I see that the bottom 50% is 15%, and the bottom 25% is just 5%. Mm-hmm. So I just want to lift that up and just thank you all for that information, make sure that's on the record, and appreciate your transparency. It's important that we have that full vision when we talk about equity, when we talk about the impacts of the tax code, not leaving a burden on those who have the least. Mm-hmm. But my other question, Madam Chair, one last question, pertains to offering compromise and the 2-year wait period that exists. It's a statute that dates back to, I think, 1884 or something like that, 1880s. And I was recently at myself and Delegate Hornberger with some of the CPAs. They were asking about that and why does it exist. My question today really just pertains to, do you all keep any data on how many Marylanders or how many Marylanders and how much of the tax burden is in that space? And do you have any thoughts on, whether we should consider relooking at that statute to potentially bring in revenue? As we know, we have revenue squeeze, and maybe one way is to maybe make it a little easier for folks, or maybe allow them to make those offers a little bit faster and get them in compliance faster.
We could probably look up somehow, because we've moved into this new CRM, we could probably look up the offering compromise, how many Marylanders are involved with it. I'm not sure if we could pull the dollar amount, but we can we can look and see. Do you have any thoughts on that?
No, I think that's right. We've made some recent process improvements, but relooking at the statute is something
Yeah.
I'm sure we'd be happy to do with you.
Yeah, we can definitely look into that, and we'd be happy to talk with you about it. The Offer and Compromise program is important. We have a number of other payment options as well. But yeah, happy to look at that with you. Sure.
Thank you all so much. Y'all be
Yeah,
blessed.
absolutely.
Thank you.
Thank you, Delegate Young. I learned something new. I did not know you were a mathematician, so that's good to know. That's good to know. Delegate Eversole.
Thank you, Madam Chair. Thank you. He beat me to it, but it's an important point that, you know, the way you look at statistics is critical.
Yeah.
When you say 25% of the households are paying 79% of the taxes, it's true that they're also earning almost 2/3 of the
Yes.
entire income in the state.
Right.
And although there's still a discrepancy there, we do tax higher incomes at a higher rate. It's the difference is not as significant as it sounds when you say it's 25% of the
Yep.
people. So I thank him for starting me up. I was already lit up on it, but I couldn't help but emphasize it.
Yeah,
So
no,
it's
I
not
think
a
it's
question,
an
and I'm
important point,
sorry.
and so that's, I'm not sure if this data has ever been shared with you before, and we want to make sure that you have it, because it's important to know who our tax base is.
It's an interesting
And
chart.
who's making what money, yeah.
If I could take a minute to add, I'll say one thing. Delegate Eversole usually checks my math when I'm in here. But two, as
I don't know
mentioned-
anything about math. You can ask the committee.
As I mentioned, that chart shows so much information.
Yes.
And one way to read that also with those folks and how they're earning is that is an underinvested asset, right? If you look at it from that sort of standpoint as well, like there's a huge asset to tap there to really grow Maryland's economy.
I thank you for that comment.
Yep.
Thank you so much, Delegate Eversole. Delegate Hartman with a brief question and close us out.
Thank you, Madam Chair, and thank you once again. So the reason why that question I had was so important about the bullion, because this is like the size of a 10-ounce bar of gold or silver. It's easy to go elsewhere. My understanding is that larger shops that were in Maryland, selling gold and silver, created a presence in a neighboring state such as Delaware. So that's why I asked for the information, because I think we've heard our local Maryland businesses, but it's even going further than that. When somebody's coming in to buy a diamond ring, that engagement ring or whatever, something that they would have never thought of going out of state with now, that shop has the ability to say,
Got it.
if you want to pick up that ring in Delaware, you can save $360 in taxes. So not only have we chased those investors out of Maryland, hurt those businesses, we've further undermined other sales tax codes that,
That's interesting.
So that's why I was asking for the information.
Okay.
It had a
Thanks.
big impact. Thank you.
Yeah, no, thank you. And thank you again all for this. We're here to help in any way that we can and to provide information, and really appreciate your work this session. Thank you.
Thank you again, Madam Comptroller and colleagues. Thank you this week for all of the great questions and discussion and engagement in our briefings and in our hearing. We will continue the discussion on fiscal matters next week for a fiscal briefing from DLS. We'll also start to get into our education topics next week as well. I'd like to wish everyone safety this weekend as we face the weather, since we won't meet tomorrow, and have a wonderful weekend. I'll see you all on the floor and next week. Thank you.